This was the pre-market high. Now, a lot of times we can go off of this or previous day high if it was up here. This is a big critical area. So what happened is out of the gate, comes down here, boom, pre-market high. It can't break it. Pulls back, tries again. Pulls back, breaks through, retest, can't hold, down. Do you see how this works? It could not hold the pre-market high. Everybody sold off. Great. Now, if we look at this, of course, big critical level. Where did it go? Bounce. Now look where we're at, and it consolidated for a long time right here. Yesterday in my Robinhood account, I was buying, held. 350 contracts of SPY puts I had yesterday. Right here, knife drop all the way down. So right here is the first one. This is the second one. All of this is the third one. So 1, 2, 3, triple top. See it? It doesn't matter how many candles are touching it. It could be 800 candles. That's considered one because that's in the same spot. Consolidation is always just one. So I was looking at this when this popped up here, and because it never broke this pre-market high, right? Touch, 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 perfect area. Isn't this the absolute perfect area? So if we're up here on the top, we put our stops here. In the payoff, if you look at the risk to reward, I'll get to your question in 1 second, Mark. So the biggest thing on this one, if you look at the total picture on this chart, okay, your risk is going to be wherever you put your stop. We'll just say up here, okay? Because we knew we saw it pop up here a couple times. So this is your risk. This is your risk. This is your reward. Because you already know if it does decide to pop, you can get out of there. But look at the downside. And that doesn't even count if it moves beyond the support level here, which it did.